I mean, just a quick question about 2021. Why do you think the stocks have performed so poorly in a year in which we've actually seen more attention on the energy transition than ever?
Yeah, it's been interesting. The sentiment seems to change quicker than the fundamentals do. There's been a lot of disruption this year, just like in 2020 with the disruption from COVID. This year faced similar hurdles. We had supply chain disruption. We had global shipping issues. We had company-specific semiconductor polysilicon issues, as well as geopolitical tensions between the U.S. and China. I think the important thing to remember, though, is although those things impact sentiment, you look at the growth in the industry. Solar shipments this year alone are up about 27% year over year.
Wow.
Growing through the last couple of years of very significant hurdles, we think is a very good long-term indicator that the energy transition is happening.
One final question in this regard, because a lot of the solar names, the domestic solar names, often people don't like them because of the financing model and sort of just the fundamental business model. They say it's not about the energy transition. It's the fact that these aren't great businesses with a lot of exposure and that sort of thing. I mean, what is your response to that? How tested and proven are these business models?
We've covered the space for a long time, about 10 years now. It has been very interesting to see the maturation of the industry. We've gone through a lot of ups and downs over the years. Through that, though, there have been a lot of companies that have emerged as solid winners. You've got real companies that are out there with real growth, real margins, real barriers to entry, and real cash flow and balance sheets. There are certainly some complicated business models still in the industry. I think they've been around long enough that investors are getting comfortable with how to think about valuation. But generally speaking, this is not just an industry that's on the whim of government incentives like it was 10 years ago. There are real companies out there.
So Array Technologies, your price target is $38. Sunrun, you have 86, and Sonova, you have 66. Why are these three your top picks?
For different reasons. So Sunrun and Sonova, to your point about the financing model, these are residential solar installation companies. So if you look at the reported GAAP financials that are out there, it's pretty messy. As long as these companies are growing, they are recognizing the expense, the CapEx associated with finding a homeowner and selling them the system and installing that system. They recognize cash over a long-term contracted cash flow period. It's a fairly complicated business model, but like I said, the valuation framework is getting easier to understand. These companies are generating cash now. And the reason we're calling them out is that these two stocks have been relatively weak compared to our overall coverage over the last few weeks. I think part of that is because of interest rates, which we think that there's some dichotomy there that isn't necessarily understood by kind of generalists looking at these stocks. But the big picture is that 2022, we think that there will be an increase in their margins, right? Okay. So these companies are transitioning from just solar installation companies to adding more and more services over time. You're seeing the attach rates of homeowners that are choosing to add energy storage increasing. They're also getting into electric vehicle charging, home standby generators, home energy management systems. There's more and more value that is being added to a homeowner over time. And we think that really starts to kick in 2022.
Yeah, it's certainly more common to see it in my neck of the woods. Mark, we appreciate your time today. Thank you so much.
Yeah, thank you.
Mark Strouse with JPMorgan.